Now, back by popular demand, it's the Lance Roberts Show.
And good morning and welcome to the show. I'm your host, Lance Roberts, of course, and it is, unfortunately, Monday. and no holiday shortened week this week either, so you got the whole enchilada ahead of you this week. I'm just all 5 days. You're gonna have to trudge it out. But I guess the not so good news is that there's an Arctic blast that's coming in. So on Tuesday, Wednesday of this week, temperatures down in Texas are going to be in the 30s. So we're not done with winter yet. But if you're up in the north, so if you're listening to our show and you're up in Michigan or Illinois, those states, negative 20s.
Ooh, that's painful.
So this Arctic blast, I mean, it's going to hit the entire nation. It literally sweeps. If you look at it, it looks like a smiley face. Yeah. Because it goes from Oregon, Washington, all the way through the Midwest, up into the Northeast. So it's not going to be pretty for a lot of people.
So, Lance,
yes,
how are natural gas futures looking?
Natural gas futures are looking very well. Energy prices have been spiking. Last week we saw a big spike in energy usage up in Dallas, and that's going to continue this week as well. So, yeah, natural gas should be doing well. Utility stocks should do well here, especially on profitability. Yeah. So
blanket sales.
Yeah, thermal blankets, survival blankets. Yeah, and it just really, I told you last week that I was having PTSD because I came out, my windshield was all iced over, and it's I just don't know. Look, I give it to you people that live up in the Northeast and where y'all have to go and shovel snow and de-thaw everything. I love you guys. I think it's awesome that y'all can do that. Ain't for me.
No. They should get hazardous duty pay for living up there.
No doubt. I mean, when it gets into the 30s, I'm like done.
Yeah.
So
yeah.
I'm like, that's as cold as I can handle it. So anyway, that is coming this week. The reason I bring that up is because this is what happens in the winter. Surprise. And it's always amazing to me that the government is like, oh my gosh, we have slow first quarter growth. Well, yeah, it's winter. And, this stuff happens. People can't go to work. They get snowed in. You can't do things. And so, yeah, we typically have slow growth in the wintertime. And, of course, we've tried to figure out ways to seasonally adjust, seasonal adjustments to account for, cold winters. But look for a lot of this economic data. Again, so two things happened over the weekend. First is that the government did come to a short-term agreement for reopening the government. Now, from the standpoint of getting the border wall funded, actually reaching some type of budget agreement, whatever, it's not likely going to happen. And probably in 3 weeks when we're right back in this mess again. I guess the positive news out of it, though, is that for the next 3 weeks, government workers will get paid, which means that we'll get some economic reports out. Employment, other things like that should start to come out. So we should get that data so we actually take a look at kind of what's happening with the economy. Don't be surprised if the numbers that we see coming out are weaker than expected, because there's already other anecdotal evidence that suggests the economy is already slowing down here a bit. And again, not surprising because guess what? It's winter. And we did have slower economic growth in the winter, weaker production, those type of things. So look for a little bit weaker than expected economic growth coming out of some of these reports. But again, that's kind of a function of the winter. We should see a rebound heading into the second quarter, typically as things kind of get back online and the world that thaws a bit. So you can see a little bit of a pickup there. What's important, though, is looking at the overall trend of the data. The overall trend of the data is showing signs of weakening and the fact that the economy is actually slowing. We had kind of peak growth last June of last year, and that was, again, because of all the hurricanes and natural wildfires that we had back in late 2017. All that money that was spent for those repairs and fixing things and getting things back on track, all that kind of fed into quarter one, quarter two last year, really in quarter three of economic growth. Well, all that's starting to fade off now, and we haven't had a replacement for that spending, so to speak. And again, when you have this kind of impact from natural disasters, those type of things, it pulls forward future consumption. So things that we were going to spend money on in the future, we now spend on it now. So, we had to buy new couches, new furniture, whatever it was. If you lived here in Houston and suffered from Hurricane Harvey, you know exactly what I'm talking about. Things that you may have been saving for to buy down the road got used today to rebuild, replace, repair the stuff that was destroyed by the hurricane. So what happens is you get a boost to economic growth in the short term because of all that spending, but it leaves a void in the future where that spending would have occurred because now the money's already been spent. So remember, there's always a finite amount of money. That's all there is. That's all that people have. And if they spend it today, they don't have it for tomorrow. So again, this is kind of what we're seeing now is that roll off of that spending in the economic data. We're seeing that kind of spike in economic growth starting to roll back here a bit. Keep a watch here on earnings. The market's really not been paying a lot of attention to earnings, so to speak. They haven't been that great. They've been okay. They're beating very much lowered expectations. So again, we kind of lowered the bar to a point that it was, basically everybody could beat it. But the real growth rate has already begun to slow down pretty sharply. So keep a watch on that. And again, right now the market's been focused on kind of everything else, the government, everything else. We are going to turn our attention really back towards earnings here over the next couple of weeks. We got a big chunk coming in, but there's some good news out of this. When companies are announcing earnings, they're prohibited from buying back their own shares. The big chunk of that really rolls off this week. Starting next week, stock buybacks can come back into play. And of course, those have been one of the biggest supports for asset prices over the last several years. And particularly last year because of repatriation, we had a big spike in corporate stock buybacks. It didn't really help the market a whole lot, but we did have a big spike in it because companies were buying back shares because of their ability to repatriate dollars. So, but again, that's going to kind of play into this year as well. So again, continue to watch for stock buyback announcements, increased share repurchases, etc. That's been a big support for asset prices over the last few years. Will likely be that way again this year. But again, the markets had a big rally on Friday because of talk about the Fed. We're going to talk about that when we come back from the break. What is the Fed thinking? What might they do? Why did the markets rally on this? We'll talk about that when we come back from the break. I'm your host, Lance Roberts. You're listening to The Lance Roberts Show. Get by our website, realinvestmentadvice.com or thelancerobertsshow.com. Either way, get all of our latest podcasts, videos, articles, more. It's all there for you. Be right back on The Lance Roberts Show. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet. Sign up for Lance's newsletter now at lancerobertsshow.com.